Hello, welcome back to my channel. It's still Misha presenting from my space, and that is Trade with Misha. Here to take you through today's breakdown or trade analysis. Before we dive in, let me share with you my mantra, which goes like success is my duty, obligation, and a responsibility. It is my duty, it is my obligation, it is my responsibility to make myself a very successful trader, a very successful entrepreneur. You should as well make it your sole obligation. Make sure whichever venture you're starting, whichever journey you're on to, make sure you succeed. Because if you don't succeed, you've been through a lot. You've gone through a lot of pain for you to quit, for you to give up. Just hang in there. Don't give up. Keep pushing. A journey of 1,000 miles started with a single step. It doesn't matter where you are right now, but just keep pushing. Start. Hustle hard. Let's dive in. Today, today is 5th of September. Just want to take you through some trade analysis. I trade GBP US dollar. This is a 15-minute chart. Today, London Open. I usually trade London Open throughout New York Open or London to New York Open, then I call it a day. But before I start my trading day, I just take a look at the previous day and find out what was price doing, like what is on the chart, because I don't just take my trades blindly, but I have to first find out what is really happening. What is the current order flow? Is it a bullish sentiment? Is it a bearish sentiment? So yesterday we had price took out sell side liquidity. We had a break in market structure. This was New York Open. We had a break in market structure bullishly. So the market broke higher, showing us that the order flow is bullish. So we had a break and we had a retracement here. This was a return to order block. This is a bullish order block. So this was a retracement back into the order block. This was New York afternoon session. Price retraced into a bullish order block. Then we had this move higher. Then this was Asian session. We formed a swing low. Price broke higher still. This is internal structure. We have external structure or swing structures and internal structures on lower time frames. I'm an intraday trader stroke scalper, so I use 1 hour, 4 hours. I use my 4 hour time frame for direction and bias, then 1 hour to mark out my PDRAs, then 15 minutes for entries and 5 minutes for entries. Then my objective is usually on the 4 hour or the 1 hour PDRA present in the market. So I participate according to how the market is reacting, how the order flow is moving. If it is bullish, I'll take on the buys. If it is bearish, I'll be looking for short opportunities because I want to always be following the direction of the trend. I don't want to be offside or caught unaware. So this was Asian Open. We formed a swing low, then we had a valid break in market structure. Break in market structure, then this was pullback. This was an order block, got induced in here, but this high failed to break structure up. So this low was an inducement because it failed to form new structures or to break structure higher. So this was an inducement. That's why I've put here. We had sell side liquidity resting below this low. Sell side liquidity, this was the Asian session low. Then this is a bullish order block. So my anticipation was for price to trade back into the order block. Then we see some bullish move. This was an inducement since price broke structure here, but this low mitigated this bullish order block, but it failed to break structure higher. So this was an inducement. It was inducing buyers into the market. Engineering sell side liquidity. That's why London Open we had price trading lower, taking out the sell stops or the sell side liquidity that was resting below this, reacting off a bullish order block. When price hit our bullish order block, that was our point of interest. We had rejection in here. Price started rejecting, forming new swing lows. So the moment you see that price is rejecting off your PDRA or your point of interest, in this case we were bullish and price was forming new swing lows. Like in this point, price formed a new swing low. So the moment you see that price is forming a new swing low, you can enter straight away, like within this rejection, because we formed a new swing low, price closed back into the range. Then you can enter just slightly here, stop loss below this low, below this swing low. You can decide to take maybe 10 pips stop loss according to your risk appetite. But if you don't want to be that risky, still this last down close candle after price forming a new swing low, we had price closing back up again. So this was a very strong confirmation that the order flow has really changed to a bullish order flow. So you can participate in the market by taking your entry in here. This was a change in state of delivery, or you can call it a market structure shift or a change in character. So this is a signature, or it is a sign that price is really ready to push up. We formed a swing low, and the market didn't just form a random swing low. It reacted off a bullish order block, and this was a change in state of delivery or a market structure shift. So you can enter confidently that the market is not gonna push downward. So if you enter here, your stop loss below this new swing low that was formed inside the order block. Then my target was the previous day high, but price traded. This is a bullish, this is a bearish order block. So price traded in here and it started again forming. It formed a new swing high. So I had to exit because I expected it to retrace back into discount before continuing higher. So when you enter into a trade, don't just hold it there and blindly like you chill. And you have to be, if you're an intraday trader, scalper, you have to be watching the chart and see what is really happening. So I entered in here. My target was the previous day high. The price is currently moving, pushing up to that, but reached here and it started forming a new swing. This was a swing high. So the moment I saw this swing high forming, I had to take my profits, because when you're trading, you don't have to be greedy. Take what the market gives you. So we formed a swing high, then we had a retracement back into, this is a discount, no, not a discount, this is a fair value gap. So we had a retracement back into a fair value gap, and look what really happened. Price started forming a new swing structure. So when price revisited or rebalanced the fair value gap, it formed a new swing low, showing us that now the market is ready again to push up. So this was a retracement. Break in market structure, we had a retracement. Now price is going for buy side liquidity. We have this previous day low and the rest of the liquidity that is resting above. We have news at 8:30, so will not be participating. But in the market, you don't have to be greedy, you don't have to panic. Psychology is the hardest stuff to master, but with practice, patience, backtesting, we can all overcome the challenges. It is not easy. Trading is not easy, but regardless, we keep pushing because it is from trading, it is through practice that we become consistent traders. Hope this was insightful. Wish to come back here, show you my trade analysis, break down some chart. Grow with me, it's me, trade with Misha. Still, my mantra states success is my duty, obligation, and a responsibility. Subscribe to my channel, like my videos. Hope to share with you my trading journey. Hope to change your lives as we grow together. See you at the top. Bye bye.